All right. I hope you guys can see me now. There's got to be a better way to do this, man. There has to be. Hopefully you guys can see it. WB. I'm not sure what that means. And at least you're typing. That's good. Well, welcome back. Yeah. Nice to be back. What a pain in the balls, dude. You know, you get your momentum going, you get your mojo going, and then douche. uh, frustrating. Frustrating. Let's wait for a couple more people. Hopefully they can see it again. Just give me a second here. All right. Okay, so anyway, just quickly, because I have to do something real quick. Again, you saw it, right? This is the void, boom, right down. So let's see if this is going to bounce off that. Let me zoom out. All right, this area of resistance that is now supposedly act as support, quote unquote. So let's see how that's going to work out. Again, so long as we're above this support line, you want to be uh, bullish within this structure here, the very small one. Okay, I think it's kind of self-explanatory. All right. So at 2 o'clock, we get a pullback. Now, if this bounces, okay, if this bounces here, there's a good chance that we can plow higher from here, okay? And the reason being is that this structure here, that wedgie-looking formation, what ends up happening is a lot of times it'll do a 1, 2, 3 down and then up, okay? Okay, so that's a possibility. Because what it will do, it will come in, it will fill the void, test it, see if there's acceptance here, and if there isn't any acceptance to sell, then it just says, okay, good for me. Squeeze in some shorts, squeeze them out. I'm sorry, suck in some shorts, squeeze them out, and then off it goes. And that's the thought process behind it. All right. So right now we're seeing that the volume that didn't exist prior is starting to build rapidly right in here. Right. So that means there's a lot of buyers just stepped in to hold price. So be ready for that. Be ready for that. Okay. Just give me a moment here, please. All right. So at 208, let's look at the internals real quick. Just for me, because I want to see if anything has changed. So we've been falling from that 2.24 where we started off today. It's been falling, right? So yeah, information technologies has fallen a little bit more. It's now in 5th place. And now, you know, when you start seeing financials at the top, you know, that's not necessarily a good signal. Although consumer discretionary and is up here, 3rd place. It's not bullish. I don't know. I mean, it's okay, but energy is supposed to be where it is at the bottom. And utilities, I mean, I don't know. It's not a definitive answer. I'm just going to quickly just go through the data for me. Okay, see what's going on here. Equal weighted S&P, dividend, VIX 35.7, New York Stock Exchange, Dow Jones, S&P. Yeah, S&P failing right at that 63, yeah. Small caps up. See, that's risk on. So small caps are all up. Bonds are selling off, which is risk on. And the markets are not behaving properly. Very strange. Transportation doing okay, right? Sideways in the middle of nowhere. FANGs within the channel falling. So that's not very strong, and I think that's the problem, that these are not behaving properly. World stock market index, you know, pulling back a little bit. Germany's doing fine, right? It's holding up really strong, really nicely, but again, the structure is fucked. Oil is okay. Bitcoin is up. Gold is what we really have to keep our eye on, huh? Definitely gold. Because, again, look how much time it's spent up here. Right? Up against this wedgie looking pattern. It's on the upper side. Keep an eye on gold, guys. Breakout here would be nice. Alright, so this is my Chinese self-created index. And it's failing, it's breaking. I didn't notice that before. Oh, interesting. The fear indicator, this is again one of my indicators I created. You know, it's a structure above a structure that looks like it's about to go bullish. Dollar. Um, it's bouncing, huh? Just want to line this up real quick. So we have a nice clear picture. Remember how I was talking about a couple days ago that this was a rising F flag, right? That needed to correct. I didn't think it would correct this much, but right, 1, 2, 3, and then came out and then just completely collapsed. First counter trend move, 1, 2, 3, right? Rising wedge, flaggish looking thing. Completely failed. It didn't reach the bottom here yet, but you know, this is a very thrusty move to the downside. So keep an eye on it. Don't ask me what this music is. I have to put things that are not copyrighted in. We know why now. Alright, 10-year hit the top. So it broke the top of top. Alright, so that's invalid now. Interesting. See, bonds selling off and interest rates rising is risk on. Okay, granted it's at the top of the structure, yes, but you know, this can go incredibly bullish, right? See? Look at that. Remember this? This is hotels versus airlines. And hotels are kicking ass right now. And we had that bearish structure. Now remember that most people, they don't look at hotels in versus jets, right? So the reason I like these personally created indexes, that it really kind of gives you a different look, an independent look at the data. And you know, the waves work here as well, right? It doesn't matter because it's fractals. So that's very important, right? That you understand that what I am teaching you is, it works. It doesn't matter, it's fractals. Okay? Just the way the market moves. All right, let's get back. It's 2:18. Let's get back to our minute chart. All right. Seems to be holding. Remember, we talked about this previous area of void. There's a lot of buyers just suddenly came in right at this area here, right here, right? See it? Which suggests there's definitely a good possibility it can bounce from here. So be ready for that. If it starts to come back into structure, look for this thing to take off, especially into the close. Right? Because it goes kind of limp dickish. It pops. You get this volume that's coming in, okay, at 2 o'clock. And then this would be a fuckery move. And then everything starts to plow higher, making this whole entire structure 1, 2, 3 in a conventional way. Okay. Okay, Alibaba was stopped. The IPO was stopped. Yeah. Yeah, I don't know. You know, the thing with China is I don't want to get too far into cute stories, but the way that China has opened up in investments in so many places in the world. For example, I've had the good fortune of flying in very peculiar places that most people would never see. They don't even know it exists. Bangladesh, for example. How many people have been to Dhaka or Chittagong? Right? Very, very few. If you go to the malls there, do you know what language they speak? Chinese. Yes, the announcements are in Chinese and in Bengali, or whatever they call it. So that's an investment in that big city, and everybody's running. Even though they don't have any money, they're all poor, but they're all running to the mall. I'll give you another one. Kenya, Nairobi. I got into a car to go to the hotel. You know what the radio was? In Chinese. And I said, man, you understand Chinese? The guy's like, no, but it works great. I put the CD and it plays. I just guess which one is play, and I play and rewind or whatever. Okay? And I said, oh, okay. I'm like, is there a lot of Chinese influence? He's like, yes, a lot of the factories now, they're Chinese owned. Okay? So these are just 2 examples. Now, as an investment group, if you look at a lot of these nations that have these wealth funds, okay, a lot of these wealth funds, they don't particularly do well. They end up blowing up. Some of their portfolio blow up, all right, at some point. Look at the guy from Saudi. I forgot the Prince something, right? He went out and bought Citibank, and then after 9/11, and then Citibank collapsed, and then he threw them some more, money, and he never really got a return on his investment. Okay, Prince Walid bin Talal, that guy. Okay, so from a standpoint of just investment, those things typically don't do particularly well. Okay, they're not run by Buffett, by the way. Right, so they don't do that well. But from a perspective of investment in many nations around the world, like Bangladesh, like Kenya, like Turkey, like whatever, even Greece, their currency can become a new world reserve currency. And that's how it starts, because they're producers, right? But they can't, as exporters, be a world reserve currency, because you need to export the yuan in order for it to to be a world reserve currency. People have to have access to your currency. At the same time, you have to become a consumer-driven economy, which I think China may be ready to do. They're opening up their markets slowly, right? They issued bonds in dollars, I think like $1 trillion. And I was like, why the fuck would they do that? Who gives a shit? It's been a closed economy for so many years, and it's slowly starting to open up. And as it opens up, it becomes an alternative. Not an alternative. I shouldn't say that. It becomes another form of world reserve currency, just like the euro, right? Back in 2000. If we look at the dollar index, where is it? We'll leave this alone for now. Let's take a look at the big picture here. Okay. Yes, .com bubble burst, but what else happened in 2000, right? The euro came to be. Right? The euro now suddenly was a world reserve currency. Not the world reserve currency, of course, but a reserve currency. So what happened to the dollar? Well, the dollar started to fall. What if the Chinese yuan suddenly, starts opening up? How is that going to impact the dollar? Right? Because slowly, with all these investments all over the world, they start opening up, and now they're starting to release those yuans into the world. You got to believe that that's going to create some pressure, right, on the dollar. And again, when you're a world reserve currency, you enjoy some benefits. There's no doubt about that. People want to trade in that currency, so you get investment, right? A lot of times you hear the petrodollar. It's the petrodollar. And then they come up with all these cute stories and conspiracies around the petrodollar. But again, if the euro is any kind of indication, and if China is moving in the direction of opening up their currency, their economy, I think that's negative for the dollar long term. Okay, so what is the point to all of this that I just said? The point is that Alessandro just said that Alibaba, something about the IPO was stopped and whatever. The point is that as more Chinese companies, their IPO, they IPO more and more companies, and not the bullshit companies that we had in the past, where, yes, my friend, yes, we have many workers, yes, we do many business, very many. And then they figured out it's like, oh, it was a lie, but whatever. But as they start to open up and IPO more and more of their companies, especially the ones that are good, that's going to attract capital, right, into their economy. And, that would also push the yuan. Right? You want to buy that stock, you have to exchange your euros, your dollars, your Swiss francs, or whatever into yuan so you can go buy them, right? It's an exchange. But I think that would put pressure on the dollar. And again, it's a macro story. It's a longer-term story. But if we keep printing the way we are, I don't know. Can that progress a little bit faster? Is that a possibility? It's something we have to consider. It's a cute story for now, but we have to keep our eye on it, right? The SDRs. Let me see where's the SDRs? Special drawing rights of the IMF I have it saved and I can't find it. Let me stop this music because I think I will slice my wrists vertically. Un momento. Well, that has a special drawing rights. There we are. So here's the special drawing rights. Okay, this is the um, XDR, they call it. And if I'm not mistaken, the one was added to the SDR. It's a basket of currencies um, that make up the SDR, the IMF. And the problem with the XDRs or the SDRs is that they're limited. They're not abundant. Okay, at least not yet. Um, let me see if I can find it. What's the date on this? September 2016, not 14. Okay? So the Chinese renminbi to be included in SDRs as a fifth currency starting October 1st. All right? So, you know, think about that. Something we have to keep in the back of our minds. How this can start to impact the dollar. Yeah, Africa is their new expansion. Yeah, and they went in hot and heavy. Yeah, absolutely. Uh, Definitely. Yeah. So thanks for bringing that up, Alessandro. All right, let's go back to our. There we go. All right. Yeah. See how it's holding? That's interesting, right? You see how that void got filled? Did I save anything? No, I didn't. No, I didn't save any of the pictures. Maybe I should start doing that just to drive the point home. Because this was a void. I was just showing it to you a little while ago, but then when the volume comes in, it fills up and then you don't see it. Well, maybe the new people that just joined don't see it. So, oh, you can just rewind it. Go back. Rewind. You'll be able to see it. Okay. So what we're trying to see now is, will this build up pressure and push higher? Okay. Well, come on. All right. Okay, I'm gonna click you a couple times. Nah, fuck. All right, let's try that again. All right, it worked. All right, so what are the structures? Let's go over the structures real quick. The bare knuckle charting structures. The normal ones that you should start looking for are the 1, 2, 3. Okay? If you get a moonshot, a thrust out move, you will get 1, 2, 3 up, or a 1, 2, 3 down. All right? So that's the most basic of bare knuckle charting. That when price starts to move vertically, you're going to get a correction, and then you're going to get a follow through. Okay. Now twos should be avoided. Okay. What you're looking to catch primarily is the 3. You can also catch a nice 1. Okay, so for example, if you have a structure like this and it's coming down, 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 and does something like this, and then you get a thrust up move, you want to buy it here, you can catch a nice 1, and then it goes into a wave 2, and then 3. All right, so that's the most basic. I used to talk about that for months. Try to get guys just look for that move. 1, 2, 3 up, 1, 2, 3 down. One, two, coming out of a structure. The next one is the M pattern, right? Or W. They're the same thing. Okay. So an M pattern is just a flat. It's a pause. Okay. It's just pausing. What is an M pattern? It's a 1, 2, 3 down, flat. All right. Now it can point upwards. It can be a little bit down. Doesn't matter. It's still more or less a pause. Okay. And if it's coming from the bottom, this is the compass. The next move should be to the upside. Okay. If it's coming from the top and you get the 1, 2, 3, then you typically look for the continuation down. Simple enough. The only time that does not apply is at tops. If you're all the way at the top, right, new all-time highs, whatever, and it starts doing some shit like this, then you look for reversal. Same thing at the bottom. Okay? And we just saw one of these on a small time frame, but here, let me show it to you. You see it? Da. Right? See it? What's the next move? Bam. Breakout. Okay? Breakout. So then you can get this, right? And especially when you have a nice little void right up here, it can really thrust out. All right. We're going to take this off because I think we proved the point, right? Okay. So let's go back. Then we'll get into a little bit, well, let's do the head and shoulders first. Because it kind of jives together. Okay, so then you get the head and shoulders. Okay. What is a head and shoulders? Well, it's a formation that kind of looks like this. Where you're going to get the left, break the high, you come down, break the structure, comes back up. Okay, and instead of being a structure below a structure and continuing down, instead what you get is this. All right. So it kind of looks like this. Something like that. Only you will get some kind of a pause here, and then it will continue. Okay. So that's a head and shoulders, but the structure kind of looks like this. All right. So make sense a little bit. Yeah. And you will see these patterns continuously, all the time. Some more than others. Then you have the limp tick. Right? It's a limp tick, and then it moves to the opposite direction. It doesn't mean it's going to go all the way to the top. It doesn't mean it's going to do. It just means once you start seeing a very, limp tickish formation, then you're going to move to the upside. Same thing with an erection, right? You'll get this. So just to kind of give you an example of that, There's the erection. Okay. You got to move up, erection, boom. You got a nice little erection, boom. Now this happens to create newer lows, which is a problem, right? But we got another one of those moves to the upside recently, right? So the question mark was, hey, shouldn't this move to the downside, right? And if it does, each time it's done it, it's created a lower low, right? So that's not good. That's not a good indication. But nonetheless, this is an erection, okay? But that's what it looks like. And then the other one is the tight, 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 boom. Or tight, 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 boom. Okay? These are the formations. And you've seen that, I don't know how many times this past few weeks, right? Go back, look at the old videos. Again, start with looking for one pattern, right? Small time frames because it's going to give you the most amount of patterns, right? So look for the 1, 2, 3 up or 1, 2, 3 down. Get used to seeing it. And then move on to other structures after that. Now, some other ones that you may come across is when you start seeing the hut, the roof hut. Okay, price will go up like this, and then it will come down like this, and then typically it just starts to fall apart. Okay, of course you got the cup and handle. Okay, but all that is it's just a structure that looks like this. It's a rising wedge that breaks out. Okay, this is a very high probability pattern, especially when it's coming from the bottom. Okay, call it a cup and handle, call it a top and top, call it, I don't care what you call it, but it's just a 1, 2, 3 building pressure to the upside. That's all that is. All right. I hope that helps. Pause the video, take pictures of it, save it, go out, get yourself a trading account. Simulate it, of course, fake money. Start practicing. All right, so we're coming into 2:40 in the afternoon. We got a little bit of a sell-off. Could be a possible 1, 2, 3 up. How will we know it's a 1, 2, 3 up? Very simply, it would be a 1, a 2, and then you will start to see this start to push to the upside, right? And then once it breaks, a crossing of the line is okay now for two reasons. The first reason is you had enough of a consolidation. Okay, price came down, tested, rejected, came back up, and then you're going into this void. So you can really catch a nice little move to the upside, breaking this whole entire structure, which could resolve to a much higher price over the course of time. Okay. How high can it run from here? Oh, it can run. Okay, it can really run at least to here, and then ultimately all the way up to here. Still being a bearish formation, okay, and then you would see the downside, but it can really run. But you got to manage the trade going up, okay? You got to take some profits. You got to improve your cost basis. You got to set, your stop to break even if you're going to go for that big move, right? And you got to see how the structure forms, where the support is, where the burden of proof is on the bulls. Okay, it's got to hold that line. It's got to, there's a lot to it. It's not Nick said it's going higher. I'm buying, and that's it. All right. VIX selling off. NYSE curve back up. Dow Jones curve back up. S&P curve back up. NASDAQ is curving. See how it's coming back into structure? Right? You see? Now this is a fuckery move. This is a fuckery move. Right? The likelihood now that this will continue higher has increased if it comes back into structure. And that's why I don't like these wedgie looking patterns, because wedgie patterns tend to have this really weird kind of break one way and then do the opposite. You'll hear me say that a lot. Okay. Now, in yesterday's video, I said gun to head what I think, right, was that no matter who wins, doesn't matter, but a lot of people are going to associate a story to that. The reality of the situation is that we've been in a, fairly tight channel that needs to correct at some point. You'll get that move up, and then if you're going to go down, you're going to go down from somewhere up top there, or there, or whatever. You don't know when a wave's going to end, right? But this structure needs to correct at some point. That's how they fool people. He moves in one direction, does the opposite in a thrusty move, gets people chasing, then it flips again, and that's how we end up with waves, right? Market moves in waves. Again, there's possibility and probability, right? So we still need to get back into structure. We still need to push through the structure, and then, there's a lot of process that has to go to take place. A lot more data that you need to keep supporting that thesis or cute story or whatever. All right, let me go to the bathroom. I'll be right back.
Mic off. Mic
All
on.
right, I'm back. And continues to push a little higher, right? Grinding. Now, I'm a big fan of grinding. I've said this before. When price grinds, it puts people to sleep. And to me, I like those moves. Thrusty moves are okay. You make some money quick, but they tend to fade. Okay. Again, what I don't like about the market is, the internals, they're kind of funky. I don't know. It's very confusing. It's not very clear because you have bonds selling off, you have small caps with 150, 200 P or something. I'm exaggerating. So I think it's like 98 or something. But you got them leading, telling, yeah, risk on, it's okay. And then you have the internals. The market leaders are not following through. So, you know, dollar selling off, which means, you know, inflation, right? So stimulus is what they're thinking. We'll see. We shall see. Again, price generally for the day is uniformed, right? It's all over except for here, but it's filling in. It's this filled in nicely. Anybody have any questions? M2 money supply continues to rise. So here's March, and then it kind of shallowed out, but it does have an upward uh, trending. Although this has not been revised since October 19th, so I wonder what the new one looks like. This hasn't been revised either, right? What is this? Q2. It's still in Q2, but I'm wondering what domestic debt to GDP is going to look like after Q3. Surprised it didn't update it yet. This is Real gross domestic product, which is inflation adjusted. This is the one you want to look at, right? So it's 18.5. We were 18.5 back in Q1 2018. So we're 2 years back. That's how much damage has been to the market right now. Assuming that, you know, Q3 remains at these, Q4 remains at those levels. And I think with Christmas not going to be as uh, as bullish as other years, that you got to wonder if we don't reverse. So 2 years worth of damage as of now to the markets. It was as bad as 17. It was as bad as 5 years. Surprisingly, delinquency rates on credit cards is not that bad. I don't know if it's because they're allowing them to defer payment or like homes. I'm not sure why, but it's quite surprising. Quite surprising that it's not rising. Corporate debt has not been updated yet. Fair enough. Anything new? All right. So I think we covered this already, but they reduced lending from 250,000 down to 100,000. Fees have been adjusted. Blah blah blah. It's the same thing there. All right. Let's take a look at the earnings yield, and here we are, 2.94. Huh? We're below that 3% again. It popped above 3%, 3.02, something like that, and then came right back down. Just like that. All right. So it's having some difficulties coming back into structure, right? See how it was rising nicely and then starting to flatten out. Right at that support area or prior support. Small caps really kicking ass, huh? Up 2.76 for the day. Talk about risk on. Either these guys are grossly fucking wrong, or they're the canary in the coal mine. Hmm? I would assume they're the canary in the coal mine, right? And this is where it all started out, just so I told subscribers right here that this was a bullish formation to the upside. And boop, that's what happened. Too bad I was sitting here playing with myself, trying to figure out the technical difficulties of the computer. and apparently what it is you have to open the browsers in a certain way where OBS, which is the program that runs it, you have to first open up the one browser that I show, and then the OBS, and then you have to select it a couple times. It's complicated, and then that has to sync with YouTube, which is on a different browser. It gets kind of complicated. Anyway, there's the move down, 3 o'clock. All right, we just got done talking about how this started to flatten out a little bit, having difficulties getting into structure again. And then, of course, we get the move down. Now, let's see if this, is going to fill and bounce from here again or not. Okay. Because if this doesn't hold, look at that. You're going right back down. Looking at Twitter, ISIS claims responsibility for last night's shooting attack in Austria. UK raises terrorism threat level to severe. Again, these things are just symptoms, but anytime you have a financial crisis, anytime you have food to income exceed 60%, okay, that's the rule historically, you get social unrest. And it only really takes 3% of the population to start a revolution. These facts, when you think about them, and you stand back and you look at the overall, forget about who's president, forget about Black Lives Matter, forget about all these things. Just look at everything from a pure economic perspective. Okay? That when you get crisis, wealth inequality, high unemployment, you get social unrest. And it only takes 3% of the population to start a revolution. Look at Syria, look at the Arab Spring, Tunisia, Libya, Saudi Arabia. Okay, even Bahrain had it, even parts of Saudi Arabia had it, but you know how they put it out? They sent everybody checks. That's how they put it out. Look at Yemen. Look at how Iran turned to be Iran. Right? Iran used to be like the UAE, like Dubai. Right? Very educated people, very nice people. I've been to Iran many times. Forget about what is said here in the United States about them. Oh, Iran this and yeah, but the people themselves are very nice people. They're educated, take care of themselves, they're well groomed. But the country is back in 1970, 1980. So what happened there? Well, there was parts of the country that was very progressive. In fact, Iranian Airlines back then was the equivalent of what Emirates is today. Right? It was a very progressive country, very westernizing country. Nobody wore a hijab, everything was fine. But there was so much wealth inequality that the religious aspect in the villages around and the outskirts, they were like, oh, they were becoming westernized, the infidels, the whatever. And let's pitchfork the rich. And again, 3% of the population is all required. And there was wealth inequality, and they started pitchforking. And that's how they ended up the way they are. Right? We look at these countries as we sit by our pool, sipping on our cocktail and barbecuing, and we're like, oh, that could never happen here in the U.S. We're so cool. But I think it's a mistake to think that. Civilization and democracy is very, very fragile. Very fragile. Yeah, the last 60 to 90 minutes, Duncan, is when the real money starts to come in, right? The morning money is a reactionary to what the previous day market action was in the overnight session, right? So you factor in Asia, Singapore, and UK and Europe, because they open up before us. Then they make some adjustments. Then you go into the lunchtime, assuming there's no big data that came out. And then towards the end, the last 2 hours, is when they start really doing their trading. They have enough information, they kind of start doing their own thing. And volume picks up, right? That's when everything starts to move. Now, in a bear market, between 2 and 2:30, you start getting those margin calls, and then people are forced to start selling. And you see, in 2008, it was like fucking clockwork. Up 2 o'clock, market would fucking collapse. 2:30 was up, market back up. And after a while, we were all just sitting there waiting, and they're like, oh, it's 2 o'clock, okay, short. Literally, we would make money, right? And cover by 2:30. And then flip it long and it would go straight up. The problem was it would go straight up and then collapse to new lows. So it was a very, I don't know. It's some parts of it are like foggy, and some parts of it are like crystal fucking clear, because the pain was so great. You know, it was like this thing. See, that's why I keep saying like this. The way the market is behaving is like a bear market, right? And then you listen to what George Soros said famously, that volatility occurs at turning points. Yes, this is true, right? And then you listen to some other people, and they were like gradually, then suddenly, right? That's true. So what happens is the market, typically in a real bear market, what it's going to start doing is something like this, okay? And over the course of 2-3 months, on an average, the moves with intermonth might be large, right? Because that's the volatility. But on a closing basis, what you will see is kind of that 2, 3, 4 months where it's going down about 2% per month, right? It starts going. It's not gradually, and then suddenly it just starts doing this. Okay. So if I'm right, and this is a valid M pattern, right? It's first, you're coming up. Everybody, okay, we're going back to normal. Everything is great. Woohoo! Yes, this is wonderful. And then it starts to fall down, and then it's like, oh shit, what's going on? And then the market goes back. Yeah, see, I told you, buy the dip, right? And then it comes back up, right? And then it starts coming. Oh, I'm going to buy the dip on this one, right? And then you have that double top, right? Breaks above, and it's like, oh, okay, yeah, everything is fine, and then it just goes, okay. So it's kind of the telltale sign that when you start seeing the 2+% moves, and especially when they occur in the late afternoon, like we saw last week, I think we saw 2-3 days where last 2 minutes there was a big move, right? Sometimes it's short covering, sometimes it's just selling. But it starts around 1:30. You'll see some kind of a move, and then 2 o'clock you'll see a move. And if you don't, that means it's saving up for something, right? Because it'll usually be doing some kind of a consolidation, building pressure. Okay, and then by 3, it will start to resolve itself. And let's say it's bullish. And the last 2 minutes, all the bulls, the day traders, they will sell it off. Okay, and then the opposite is true, especially towards the end of the week. They'll short cover. Okay, and that's why a lot of times I'll say, well, especially when there's a thrusty move, that it would do something to the effect. It would do something to the effect like this, where it will drop, and then it will behave like a magnet, and then price would come back and close here. And then the next day, it will pop up, do whatever it does for the day, and then sell off at the end of the day. Okay. Again, this is acting like a magnet. Then it drops below, acts like a magnet, brings it back up, pops, right? And then, you see it? Gradually, then suddenly, first it goes up and then down, right? These are not normal behaviors. This is fuckery. You stare at a chart long enough, my friend, you might come up with your own interpretation of how you see things, what makes sense to your eye, and everybody's eyes. We all see things differently, right? But if you can come up with a system that you can understand what the market is doing, it might be just as good as bare knuckle charting, right? But good luck trying to introduce that which works to other people, because they're not used to it. They're not used to these kind of different ways of reading the market. They're used to, they go out, I want to become a day trader tomorrow. I will buy books. Yes, I will listen to books. resistance, support, RSI, MACD, candlesticks. This is a baby top. This is a I don't know, grandma bottom or whatever. I don't know. Elliott wave, ABC, 1, 2, 3, and ABCZDW. That shit doesn't work. You could think of it like that. Yeah, like money managers study all day and then make the decisions. Yeah, that's okay. But remember, money managers, they're putting on positions over the course of 3 months. That's why we do the 63 day. They're not sitting there like us. See, we have the advantage. We can go in and out very quickly. For them, it's not like that at all. At all. Not. I don't even think they think along those lines. You know. They're just making decisions, and then whatever, you know. Think of it like this. You know, when I hear a lot of conspiracy theories. The Rothschilds, the fucking this childs, and this, and the New World Order in China and America, and the blah blah blah. Yeah, okay, so the net effect of all those conspiracy theories are opposing, right? The Illuminati and the Rothschilds are not the same thing. China is not the same thing. The U.S. is not the same thing, right? They're all opposing forces, but the net effect of those opposing forces is going to result to something that you can see, right? They offset each other. So they're all bullshit. They cannot be. There's no one winner. I don't know if that made sense, but the markets are the same way. There's so many opposing views. There's Trump bots in this market. There's anti-Trump bots. There's, you know, perma bulls. There's perma bears. There's, you know, so many opposing forces. What we view is the net effect of those opposing forces. That's it. And those opposing forces produce fractals. Not always, right? And then those fractals is what we measure to find a good risk reward. That's the way I look at it. And that's why it's so repetitive. Go out and look at a mountaintop. Google it. What are you going to see? You're going to see exactly what you see in the charts. It's everywhere. And I don't want it to sound like this is Fibonacci or something, right? But you'll see mountains like this. And then they'll start to fall apart. It's throughout nature. How many head and shoulders have we seen? How many inverted head and shoulders have we seen? How many 1, 2, 3 flats have we seen? They're the same things, right? How many channels have we seen that fail? Right? Been doing this for weeks. Again, if I can't point to it and you can see it dynamically in real life, then you shouldn't listen to me. I think the stories is what I lack. To tell the story that sounds good to people. People like stories. I think it helps them accept things better. The smart money, my target area. If this happened, then that would happen. If that doesn't happen, it's because this didn't happen. And this didn't happen because that didn't happen, then this is this. And it's stories, and that story keeps adjusting. And, you know, it's always the we, the smart money, they. I don't think like that. So it's kind of stuck there. Okay. We saw that yesterday, no? Where it just kind of stuck at this point. Let me pull it out a little bit. Measure from the top. Yeah. Tell you a little secret. Yesterday, I went long. I think it was somewhere down here. And then price collapsed. And then it popped, and I'm like, you know what? I don't know what this fucking thing is doing, you know? Maybe it'll do something like this. And I stopped out of my long position, flat, even. I think I lost like $200, whatever it was. And then, whatever it was, the last 30 minutes or whatever, the thing took off. Back up again. And then this morning we had this bullish formation, and I wanted to go long again, to be honest with you. But I was too busy doing other things. And literally, I posted this, and then I was trying to fix YouTube, and then I just took a little glance, and it was already, it already took off, and I'm like, fuck, you know, easy money, man. Yeah, so these are the types of trades you want to take. Uranium and helium, short, fixed futures. I don't know what that means. This is the VIX. I wouldn't be shorting shit, man. I don't know. Markets can do some crazy shit, especially around these kind of events. I remember 2016, the market was going sideways. And 16 is when I first started, by the way. I mean, I started back 2010 talking about indirectly about markets and whatever, but 16 is when I started to do this QMMT and RealMacro, blah, blah, blah. So, where was it? This one here, Trump. I even have it marked. Look what the market did. Went down 7%. I shorted it. It went straight down. Flipped. Long. It goes straight back up. And then I was like, okay, I'm out. And then it took off. Okay. Very memorable. So, if you want to short or, you know, go long, do whatever, please just be aware of this market movement. You could see, I mean, you can make an enormous amount of money if you're right, you know, but don't do mental accounting. That if it does go your way and you don't take the trade, that, I could have made money, I'm smart, you don't know, and I knew this, and da. Okay, that's a normal human reaction, by the way, but it's also degenerate gambler. And I knew it, and Trump this, and Biden this, and da. That's mental accounting. If it doesn't go your way, you know, that's why I didn't take the trade, and Biden this, and Trump that, and I knew it, and da. I know it. Why? Because I used to do that kind of shit. Right? And that's the cold, hard thing about trading. Can't lie to yourself. Can't do it, man. That's the kiss of death. You don't think I was the guy, the degenerate gambler? And not that I was trying to gamble, that was not the case. But those creepy things come into your mind, that mental accounting, and then you end up lying to yourself over and over and over and over and over again, and until you keep losing and losing and losing, and then you get tired of it. And then you're like, okay, well, I gotta stop lying to myself. I gotta figure this out. And then you wise up. All right, that's the S&P 500 trying to hold on. Okay, so into the close, likely what's going to happen is this. That's what's likely going to happen. Oops. You're talking about the uranium, the actual uranium to trade. Parity with gold. I don't know. Yeah, there it goes. Okay. So you see this now? This is a cup and handle, isn't it? Or a wedgie pattern. You see it? I was just showing it to you. Right? See it? Higher low. Very bullish. As we speak. Duh, yes. Right? You want to take that shit to the long side, baby. Because this could be the 3. So where would you set your stop? Very, very simply. Below here. Alright. Oops. Okay. Back into structure, breaking the previous high. You got a higher low. This formation now is broken. Okay. Where's the compass? Here's the compass. Here's the correction. Here's the next move. Okay. This is a very good risk-reward play. We waited all day for it. All right, 30 minutes left to go into the session. building that pressure, right? Right above the structure. See it? This is good. This is what you want to see, right? That's a perfect textbook stuff that I'm talking about here, right? Let's see how far it can run. Let me go make a nice Greek coffee as this continues to push. There's nothing like Greek coffee. When I come back, what is, I forgot what uranium is. What's the ticker, if you can show me that? Because honestly, I haven't looked at that in forever and a day. I think we really have to keep our eye out on gold. I think that thing can really break out. By the way, don't pay attention to that point of control. Let me adjust it. If you want to see the point of control from when it blasted off this morning, then you have to adjust it. Right. And this was the low right there. So the point of control is where it's coming from the blast off this morning. Needs to get through it if we are to proceed with that wave 3 up. Okay, good. At point of control, pushing higher. All right. Remember how I was telling you, like, you don't have enough information to figure out what this thing is doing. Give it time, blah blah blah. Right. See how nice it's and clear it is now, right? It's a lot clearer now because now that we bottomed, look at that. Duh. That's the wrong anchor point. There it is. I'm looking at my coffee. I'm trying to do this while I'm standing, and the thing with Greek coffee is when you're looking at it, it never cooks. You walk away 2 seconds and it blows up. And the kaimaki, as we call it, it's the top frothy part of the coffee is the absolute best. Literally, it's worth more than gold and uranium combined, that first sip. Look at that. I've been standing looking at the coffee and it's not cooking. See, this is what I mean. You walk away for 2 seconds, it's like a volcano. Because it brews, you know, just... Ooh, beautiful. Nice and thick. That's what she said. All right, I'm back. All right, consolidating at the point of control from the move from this morning, right? So we got the signal from this. Okay. And what is that? That is this. Call it cup and handle, call it whatever you want. If you didn't see the structures and you're just joining us late, what is that? Go back and look at the various structures that bare knuckle charting has. Right. This is the compass, this is the correction, this is the breakout. All right, 340, pushing higher. Spectre, do you have the uranium ticker for TradingView? Spectre, Habibi. All right, here we go. Go, 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 go. And always be aware of the previous high, please. Always be aware of it. And always look at it from a different perspective as well. Let me close this out. Should always have two charts up, huh? And make sure the lines are correct because that shit moves. There we are. Push through. Go, baby. Make daddy proud. Nasdaq up 2.2 for the day. See, we're starting to see what we saw yesterday. That for whatever reason, it's having difficulties here. It's very nubbed, right? Nubbed. Nothing here. And 345 coming up. It's pausing. Okay. Previous highs. All right. They're not gonna be very simple. Just gotta give it time. Spectre Habibi. What's the ticker for uranium? I should look it up, huh? Instead of keep asking him. I'll do it in a different browser. Uranus. Oops. I was looking it up. Stuck. Absolutely stuck. Let's take a look at the S&P. All right. Remember what I just said? I don't know, what time was it? 3:15, right? When you look at the way it is performing, that in the S&P you will see a push higher. Right? So long as it remains above this, the bias is to the upside. I know it's simple, but a lot of people that don't see it like that. So S&P is doing good. Let's see the market internals really quickly. How have they changed? All right, so it's back up to 2%. Industrials, financials, consumers, yeah, still not. It's not the way it's supposed to look. Europe is up strong today, 3%, really strong for Germany. Look at that, relentless, huh? Particle market. This is what a particle market looks like, by the way, right? This is an hourly chart, incredibly bullish. This is my friend Daniel's favorite index to trade. It used to be mine as well, and then it started to lag, and then I stopped. But this is tight. Let's see if he does this. Not here, but at some point. But up 3.13% for the day. Fading. Fading. No follow through. Come on, baby, come on. Break that damn structure. See, if we break the structure, if you're a bear, that's good because it's gonna suck in some longs, right? It's gonna correct this channel on the way down, and then from there it will be a lot easier to push much, much lower. Okay, if you're a bull, you're like, yeah, you know, I want this thing to go. It breaks the structure, it goes up, you make some money, you know. Everybody's happy. See, typically I wouldn't say buy here, you know, if it wasn't an election day where volatility can be extreme. Because 2% is the upper extreme normal range, right? So you give it a pass. You give it the opportunity to do something extraordinary. By the way, uranium is URA. We'll look at it afterwards. Here it goes again. 7 minutes left to go in the trading session. Now, I want you to be prepared that if it does break, okay, if it starts doing something funky and it breaks hard, okay, it does something like this, I want you to remember that this will behave as a magnet. Okay, so you gotta be quick on your profits. Once it comes back down, you can take it to the long side, of course, right? Depending on how it starts to build and whatever. But I want you to start thinking ahead, okay? These trend lines, you know, they behave like magnets, okay? I showed that earlier in the video, why that is. Maybe I should put these structures in so we can remember. I usually leave them there, but I was trying to show you something. So we started out like this, right? So we had the 1, 2, 3. We had the 1, 2, 3 down. Broke down, and we shorted up here, if you remember, as a demonstration. Broke down, popped up. It was having difficulties getting back into structure. We then identified how it started to shallow out, right? It came straight up and started to shallow out. We got the break. Bounced. Came back up to this area of resistance. Right in here. And then we measured it, not measured it, but looked at it, right? We went, okay, it's a higher low, it's a cup and handle, whatever you want to call it, but this is very extremely bullish when it does this higher low. We broke out, came down, popped up again, up against resistance, point of control, blah, blah, blah. All right. And now it's not following through. Nonetheless, this is the new trend line. And, you know, it's doing what it's got to do. But look at the way volume drops off immediately as soon as it passes this. What's that area? 11,343. It's like magic. As soon as it touches it, sellers come in. Wow. Two minutes left in the session, and you know, up in the morning, down in the afternoon, up in the early afternoon, late afternoon, and down at the close. Volatility, gotta love it. Lost 0.5% in a matter of what? 1, 2, 3, 4 minutes. Look at that. Look at that. Let me measure that now. Almost 0.6%. It is 0.6. And look at it. Look at it. Go, go, go. Fucking thing. Well, from the perspective of the cup and handle, whatever you want to call this, okay? From that perspective, it didn't meet its objective. Okay? From that perspective. From the perspective of the compass, if this is the compass, right? And this was the thrust up correction, and this should have followed through. It did not meet its criteria. So what does that leave us with? Well, what that leaves us with now is, again, this whole structure doesn't make any sense, right? The whole thing looks fucked up. So what we're looking at now is this. All right, let me take everything out. That we can possibly see a 1, 2, 3 up. You see? It's a more complex structure. And when it's, again, you see how the burden of proof just went right through? Look at that. In the last 2 minutes of trades into the close. Blew up. All right. So what does that look like? Well, yeah, 1 second. Come on. So when you look at it from the bigger time frame, right? What is that? It's a high base. This is a high base. Right? See it? So this is a high base occurring at the bottom just below the resistance area. Okay. Show it to you again. See it? So keep this in mind. It's not all is lost. Huh? Not all is lost. That's what I mean. Price is trying to provoke emotion. It's provoking emotion. It's trying to, you know, fuck with you. But we know better because we have a structure and we know that the bias, so long as it remains above this, okay, and builds this 1, 2, 3 sideways high base, that the bias will be to the upside. All right, make sense? It literally lost 1% in the last, I don't know, 10 minutes of trade. Massive move, massive. Right? Volatility occurs at turning points. The fact that it keeps doing this, what is that telling you? The overall performance of the market is fragile for the bulls because of the way it's behaving. See, you have to experience it. You have to experience the bear market. You have to remember it. Take notes, videos, whatever. Because very few people are experts in bear markets, because bear markets occur, I don't know, 2-3 times in your lifetime, and maybe once or twice when you're conscious of what you're doing, right? So there's not a whole lot of expert bear traders out there. And I suspect that's what causes that volatility. Last time we had a bear market was 10 years ago. All right, so that's it. I'm going to be on probably all day, okay? As results start to come in, the market is going to start to do what it does. I'm going to try to provide some guidance as to what I see. It's also very helpful in teaching my bare knuckle charting, right? How it performs. And the whole point of all this is for you guys to speak the same language I do. At the very least, you'll get a different perspective from the conventional way, and I think that in itself is value to most people. If you want to learn more about this, okay, come down to patreon.com/RealMacro. 24-hour live chats, okay? You'll get videos as well. You'll also get some background trades that I do, okay? They're not trading signals, all right? So come on down, subscribe. Don't forget to like and subscribe to YouTube, please, por favor. And thank you very much for joining me. I'll most likely be on later tonight in the US time. And as results start to come in, and it's not going to be for a while until we know who the winner is, of course, but you will get some movement in the markets, right? And we know what we're talking about now, right? That we are looking for this to high base and possibly push through, correcting from this structure over hither, correcting, okay? See how far it goes. For the bears, this is what we're looking for. For the bulls, we're seeing a possible move at least to this area up here. Okay, and then we'll see how it behaves, right? If it starts doing this shit, we'll take it to the long side. All right. And it all starts with, possibly, it could possibly start with this very small minute time frame high base. Okay. That's it. Let's take a look at the market overall. Remember, we were at 1.96. And we closed the day for the S&P up 2%. Industrials, financials, consumers were leading. Energy, communicate. Nothing has changed, right? Pretty much the same. All right, S&P. Oh, that's not good. All right, S&P closed, broke the trend line up. You don't want that to happen. All right, that's not good. But again, not all is lost. Okay. You want this to hold, but again, we're looking for that sideways. Right, 1, 2, 3. And I'll leave it like this until we open up later tonight. Okay. Above the point of control, above the value area, as they call it, 70% of all trades where they go up, off. And S&P is below 2.95. Okay, so the 10-year continues to push higher, guys. You know, continues to push higher. See, what happens is they compress, right? The earnings yield is falling, 10-year is rising. That creates a compression that's negative for stocks. We'll talk about that later. The dollar down 0.5%. Okay, remember I was telling you that it'll probably do a 1, 2, 3 down, right? That this could be a 1, 2, 3 down tested and then possibly bounce from there for the dollar. Small caps are really kicking ass all over the place. They're still doing fine, right? Out of this rounding bottom, took off. Previous highs are going to, you know, behave as potential resistance area, and that's what this previous high is, right? Going all the way back here. Okay, there's a battle going on. It dropped, it popped up, it's fighting, trying to get through. All right, let's see if it does. But right now, risk on for that, for now. We'll see how that is later on today. Transportation is nice, big reversal. All right, filled the gap now. So we'll see what happens here. The FANGs, where is it? FANGs. That's Germany. Germany really kicked ass, huh? It exploded to the upside. I think what's happening here is that it got too bearish, right? And now they're trying to, you know, push it back up quickly. I don't view this as bullish at all, to be honest with you. I just think they overdid it and they're correcting. Where the hell is... There it is. Alright, not very bullish in terms of the FANGs. Okay, so that's a bad signal for the bull case. Airlines, it popped out, didn't follow through. Alright. One more second. So this is actually, you know, in terms of a trade, if you did take a trade from this position, and I'll leave you with this. Right. If you did take a trade off of this, because this was a bullish formation, you're still break even, maybe down a little bit, maybe up a little bit. If you did take it, I would stop out. I would not continue this. Let this play itself out. See if this holds. See if the high base continues. And if it does something like this, you can always re-enter here and take it up. Make sense? Yeah. From a risk-reward perspective, that's the best case scenario. That's what you want to do. Conversely, if you want to take it short, okay, then you wait for another pop, this to break, take this one short. All right, take that short. Because if this starts to fail, it's not going up. Okay, the probability is not to the upside. All right. Okay, makes sense. So for right now, one last look from the longer term perspective. All right. Previous highs, let me get rid of this. Okay, a break from hither. Point of control from where it started to fall apart is at 11,692. Okay. That's where you can expect for price to move. And again, I'm going to point out that for whatever reason, every time it hit this area here, it just kept failing. Kept failing. So there's a lot of resistance there. All right. All right, guys. Thank you very, 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 very much. I will see you later on today. Anybody have any questions? Going once, going twice, going 3 times. All right. Take care. Masalama. I'll talk to you guys soon.